Hey there, YouTube family. Earnings have kicked off this last Friday, and a very important company that's reporting this week, Wednesday, after market, is Tesla. So I'm going to be covering Tesla's earnings. I'm also going to be talking about Elon Musk's most recent venture into AI. And because I promised you guys some time back, I'm going to cover Lucid and ChargePoint as some bonus stocks at the end of this video. So stay till the very end. This is the Stocks with Josh show. Thank you guys for hitting the like. If you want daily stock and crypto insights and technical analysis and predictions, then hit that subscribe and that YouTube all notifications bell. All right, it seemed no surprise that Elon Musk has gotten into the AI technology game. He opened up a company called x.ai Corp. I want to recap Elon's history with AI up to this point. This is obviously within the scope of his wheelhouse, an area of innovation and technology that he would love to be in. And he did become one of the founding members of ChatGPT, the company behind it called OpenAI. He started them off with a massive influx of cash, giving them $100 million to get the idea off the ground. This was created initially as a non-profit. Now, what exactly Elon expected out of it, it's not clear to me. I could only speculate or guess. But somewhere along the way, he didn't feel that they were moving fast enough to move the process forward, move the idea forward. And so he came along, put a lot of pressure on them. And apparently that created a tension and a break. And they went their own separate ways, forcing OpenAI to go out looking for another sugar daddy that they found in the Microsoft CEO that 10x'd Elon's initial influx of cash and gave these guys $1 billion. And apparently that's what was needed to bring the idea into fruition. And we all know that ever since ChatGPT came out, it has actually shocked the world, as it has the potential of touching every single industry and every single area of our lives. Elon was miffed about this, as he once tweeted, "I'm still confused as to how a nonprofit to which I donated $100 million somehow became a $30 billion market cap for-profit business." He went on to say, if this is legal, why doesn't everybody do it? Well, perhaps it was the original game plan to begin with. Start off as non-for-profit, build, and eventually flip the switch. I don't know what Elon had intended or what they had intended, but there obviously is a massive amount of profit and money to be made in AI, and Elon is getting on board. It was also reported that Elon Musk was furious at ChatGPT's popularity after he had left the company. And as a result, Elon spitefully blocked ChatGPT from accessing Twitter data. But that was just the first step as he was moving to get back in the ring. Now, the reason why I'm including a conversation about AI and Elon Musk and ChatGPT is because I believe it directly affects Tesla. One of the biggest questions that a lot of Tesla investors have brought forward since this announcement that Elon's getting into AI is, hey, we thought that Tesla was the tech company. Why not just bring the AI technology through Tesla? I'm going to give you guys my opinion right off the bat, which I'm sure will be controversial. Tesla is absolutely a tech-driven innovation car company that can introduce technologies that will change the car industry, but at the end of the day, ChatGPT, AI technology, and his x.ai company, these are all going to be much bigger if they develop on their own. And so it makes sense for them to develop separately and possibly to have crossover between the two in the course of time. And if that idea is true, then everybody needs to look at the bottom line on Tesla and begin to judge them as an innovative, tech-driven car maker. And that's where this earnings becomes so critical, because where we left off with Q4 of 2022 was a surprise upswing for Tesla and a reminder of how powerful of a company they are and how well they're doing and how they're changing the automotive industry. And the bottom line is that moving into this Wednesday's earnings, we're going to be looking for whether or not these guys are scaling up and whether they're maintaining a good profit margin as they do it. That's what's going to be on the table this Wednesday. That's that Tesla's been aggressively cutting their prices, and what the analysts are going to be looking for is that demand follows through and is increasing, and that they're not cutting their prices because of a loss of demand. They want to see that the demand is spiking because they're cutting their prices. This is under enormous scrutiny. An analyst by the name of Matt Tuttle from Tuttle Capital Management said they haven't accomplished it, and that when the earnings come out, this thing is going to be on its way to a $150 price target. Obviously, he's very bearish. And another analyst has pointed out before earnings that when the wait time for Teslas sinks beneath 4 to 6 weeks, that Tesla turns around and cuts prices more to try to push sales. And we already know that Tesla has a superior cost structure. And if any EV company could afford to cut costs and make the product more available to a wider group of people, it would be Tesla. So what is expected of earnings? Well, it is expected 86 cents a share, but the street is saying that they're likely going to do a beat and give us 99 cents per share. That's what I'm watching for this Wednesday. Now, I'm going to take a quick station break from my affiliate, the moomoo investment app, and then I'm going to get into some technicals, specific technicals and predictions for Tesla stock. If you need better trade tools, then click on the link in the top pinned comment and you can get up to 15 free stock. They're currently offering a up to cash coupon of $1,500. So if you make your deposit, you'll see a cash coupon appear in your account that you will immediately begin to trade with. And then they're also giving away a 1-month subscription to Benzinga Pro. I use moomoo every day. I specifically love their earnings calendar, and we are back in earnings season, and so I'm in there every day looking at who is reporting and what the opportunities are ahead of us. But in addition to all that, I host a chat group on the app called Stock Josh Fam. So get your free money, start investing today, and then come find that chat group and we'll continue the conversation there. Okay, like I said, Tesla is going to be reporting this Wednesday, Q1 2023 earnings after market, and then at 5:30 they're going to be doing a Q&A to discuss the forward outlook. Now, Q4 2022, after the stock hit $101 low, Elon came out with bold claims about ongoing demand increasing year over year. The stock soared all the way up to $217, and then after that it back tested all the way back down to $164. So Tesla has been a very, very volatile stock. It's above 180 today. Tesla is still, though, down 45% from its all-time highs, while the S&P is only down 7%. So Tesla has been a riskier stock than if you just owned the S&P 500. Tesla, though, is up 47% so far this year, while the S&P is only up 7% so far this year. Now, the biggest thing that I want to point out to you guys, if you're in Tesla stock, we have a very long-standing downtrend established on Tesla. But the next touch point for that downtrend, that next area of resistance, is as high as $225. So there is absolutely room up, and there is a strong likelihood that Tesla would go back up there and touch that trend in the course of time. But in addition to that longer trend time that Tesla could go back up and test and get rejected at, we have a local trend. And the local trend is a downward ascending channel. Now, downward ascending channels are actually bullish. Upward ascending channels are bearish. So if a stock moves up in a tight channel, it often breaks to the downside. If a stock moves down in a downward channel, it often breaks to the upside. We've got a downward channel. Now the top of that channel is around $200 and the bottom of that channel is 150. So Tesla is literally set up perfectly today within that channel, sitting at the middle of the channel, and we're going to find out whether we're going to hit up to 200 or go down to 150. Both are a possibility right now. Now, I also took some time and looked at the momentum indicators like the RSI, and on the weekly time frame, you see that we're still operating on an oversold condition that we got at the beginning of this year in January. The very last time that we got this oversold condition, it was a great place to buy Tesla stock. And lo and behold, when we got oversold on Tesla again on the weekly time frame, it was yet again a great time to buy. However, we are right beneath the 50% mark on the weekly RSI, and we have yet to break over definitively. What that means is that the bears still have control of this stock. It has not been passed over to the hands of the bulls yet. And so we need to see whether it gets rejected and moves down from here, or whether we break over on the RSI and the momentum shifts to the long side. It's all about these Q1 earnings for 2023 to see if Tesla and Elon Musk are going to follow through on what he said. I also want to point out to you guys that on the daily chart, we're beneath the 200-day moving average. And you just have to know in a very simple way that when you're beneath the 200-day moving average, you are in a bearish trend. When you're above the 200-day moving average, you're in a bullish trend. So we're floating right beneath that trend, which means that we could cross over and that trend could change and it would be bullish for Tesla moving forward. But until we do, we have to understand we do not have a long-term buy signal on Tesla because we've yet to have that confirmation and break over the 200-day moving average. More than likely, we're going to come up and back test it because both the 200-day moving average as well as historic resistance both meet up around that $225 mark that it looks like Tesla wants to jump up and touch. If we get rejected there, we'll still be in a bearish trend. But if you are in a trade right now, it is obviously pointing to a strong potential of a move up all the way to 225. So how am I playing this? Well, as always, I want to give you guys full disclosure. I am in Tesla right now. I'm going to play through earnings, which is very rare for me because normally I want to get out before earnings in a bearish environment like this, but obviously I'm leaning bullish. This is not a suggestion for what you guys should do. I will tell you one caveat. You always have the opportunity to put a stop loss in, or another way of playing more risk off would be to limit your position size. And that's how I'm trading Tesla. I don't have a massively large position. I have a smaller, limited position size, but I am playing it going into earnings because I believe that the larger potential is for a push up. And if we do push up, I can simply add. And if we push down, I can cut it loose. That's what I'm doing. If we want to look just quickly at the positive, Tesla has got a major operating margin lead on its competition, and we're hoping that after the earnings call, we're going to get that Q&E, and we're going to get that outlook of the future, which is going to be affirming that we are going to continue to move up. Guys, let me know in the comment section what you're doing with Tesla. If this is an important company that you guys want me to cover, I'm covering it. Why am I covering it? Because I'm in it. A lot of times I cover the stocks that I'm in. Sometimes I cover the stocks you're in. The next two are stocks you guys are in that I'm not in. Let's dive quickly into them. This is the bonus round on Lucid, on ChargePoint, and I'm even going to throw in NIO today. Quick recap of Lucid right now. We know that the Saudi Arabia sovereign fund has come behind them, propped them up, and said, we'll give you guys $4.6 billion. And in the last earnings, we found out that that should hold them over to Q1 of 2024. So these guys should be with all the lights kept on and the bills paid for the rest of this year. They've got between now and the end of this year to make this company profitable. And I'm just going to tell you straightforward, most analysts don't think that they can make that happen and that they're going to come up, burn through almost $5 billion. And the question is are they going to get any more money? And until that could be confirmed, the stock has just been going down. It's also been reported that Lucid has been losing their reservations. People that put a down payment, that said, yes, I'd like to buy a stock when it becomes available, they're losing those. And on that news, Elon did not miss a beat and quickly tweeted out that these guys are not going to make it. We know that this guy's got a strong bias against Lucid, but he also has a bird's eye view of what it takes financially to make a company like this succeed. And we just have to find out in the course of time whether he's being honest. From a technical point of view, Lucid has been in a tight channel between $8.46 and $7.53. It needs a daily close above $8.46 to get a possible move up to $10.60. The overall charts absolutely lean heavily bearish. Now, I warned about Lucid and the downward trend that it was in months ago and advised people not to buy it. If I even warned when it had that massive run up to $16, I said, this is your opportunity to potentially get out. Now, I'm not saying that Lucid is dead. I'll continue to watch it. I'm not in it, and it's down on its lows, and we're going to have to see whether or not it pivots. Now, on the note of pivoting, I actually did get a buy signal on the moving averages at $7.75. So if you were a huge risk taker and you were not afraid, you actually do have a small beacon of light of possibly buying Lucid at these lows for a potential move back up. I myself am going to pass because I've just got other more interesting trades. Now let's quickly cover NIO. I've said numerous times, every single time I covered NIO, that if it's above $9.50, it's bullish. If it's below $9.50, it's bearish. Well, today it's above $9.50, something to really take notice of. Now, it will really get moving if it has a daily close on the charts above $10.31. then I think it would be on its way for a run up to $11.40 or the $12 range. Right now, it's leaning a little bullish, but we need to watch that it closes above $9.50 and doesn't close the end of the day back beneath it. If it closes back beneath $9.50, take that bullish trade off the table. ChargePoint. These guys are, in my view, one of the best in class for the EV charging stations. However, I'm going to tell you, I'm not in it, and I am bearish on all of the EV chargers right now. This could be the absolute bear winter, the low of the EV chargers, and we could begin to see a turnaround by the end of this year. Largely, I think a lot of them are going to drag along the bottom, and that's what we're seeing. We're seeing these charging station companies breaking key levels and breaking to the downside, which is, I know, very discouraging for those who believe in them. Now, on the positive, we did see a bounce near support at the $8.38 range. And for that to continue to be bullish, we need a close above $9.49. And if we got that close, I think we'd push up to resistance at $11.20. ChargePoint is below the 50 moving average. And when it lost the $11 range, that was super bad for the stock because 11 had been a key support for a long time. And like I said, even though ChargePoint is best in class, it might be best in class in a bad investment segment. And what do you say, Josh, why is it a bad investment segment? Because it's not right now showing strong relative strength. And I want to remind you guys that there's always a place on Wall Street where stocks are popping off and thriving. One of them is any stock that simply has the letters AI in it. There are companies, there are stocks that are soaring to all-time highs that aren't even artificial intelligence companies, but just stocks that have the letters AI in it. Now, I'm not telling you that it's rational and that you should run out and invest in those. I'm just telling you there's always a hot segment in the market. There's always one showing great relative strength. That's why I started this segment off talking about Elon and what he was getting into, because this is a segment worth watching. But I also want to say, you know, ChargePoint, the EVs, they're showing great relative weakness compared to the rest of the stock market right now. So you got to be cautious about investing in them. If you are bullish and you intend to invest in these, in my personal opinion, we've touched the lows. If it holds 840 would be a great place for you to put your stop loss in. So if you were to get into this and it held 840, you put your stop loss in at 840. If you were to get into it right now, you might be buying the bottom of the range, and I think it could easily move back up to the top of the range, which right now I'm defining as $11.40. So there's a potential trade between where it's at today and $11.40, and you could potentially be getting in right at the bottom of that with the opportunity of the upside ahead. If that 840 breaks, I'm telling you that the immediate place that it'll go to in the next 24 hours is $6.92. You guys have been warned and advised. I hope you enjoyed this content. Thank you guys for watching today. Thank you for hitting that like. If you want more of this, then you know what you got to do. You got to hit the subscribe and the YouTube all notifications bell. I've got a ton of videos planned for you guys this week. More content than I seem to have the ability or time to deliver, but I'm going to do my best. I'll be seeing you guys again tomorrow. Peace and blessings, my friends. Take care.